Why FDM? Let me start with a question that might make you uncomfortable or hit close to home. How many trading systems have you tried that promised you consistent profits, only to leave you more confused and frustrated than when you started? If you're like most traders, the answer is probably more than five. Maybe you've tried ICT with all those complex skill zones and manipulation theories. Perhaps you've spent months trying to master smart money concepts, only to watch your carefully drawn liquidity zones get violated time and again. Or maybe you've cluttered your charts with so many indicators that you can barely see the actual price action. Here's the truth. Here's the reality. The reason you've been struggling isn't because you lack intelligence or dedication. The problem isn't with you, it's with the systems themselves. It's because most trading systems are fundamentally flawed. What you learned today I'm going to show you exactly why 90% of popular trading systems are destined to fail and create more noise than clarity, leading to frustration, inconsistency, and losses. More importantly, you'll discover how the four-dimensional method solves every single one of these fundamental problems, strips away market noise, removes guesswork, and teaches you to read price action directly with clarity, logic, and confidence. By the end of this lesson, you will understand why you've been struggling and how FDM provides the clarity and consistency you've been searching for. The core problem with most trading systems. Most traders struggle because trading systems are either too complex, too subjective, or simply unreliable. Think about this. When you're drawing a new destination, you use GPS for clear step-by-step directions. Imagine if instead you had 10 different GPS systems, all giving you conflicting directions, some speaking in riddles, others only working on certain days of the week. That's exactly why most trading systems do to your brain. They create mental overload and confusion instead of giving you the essential information you need to act with focus and discipline. The four-dimensional method eliminates this mental overload by combining four essential dimensions into one holistic framework. Levels, precision in identifying true support and resistance zones, to structure, understanding logical market behavior, to time entries, recognizing session behavior and ideal trading windows, and the fourth and the final one, dimensional alignment. The power of all three dimensions aligning to multiply the probability of success. Why other popular systems fall short? Let me walk you through the specific problems with popular systems and show you exactly how FDM solves each one. First one, ICT, inner circuit trader problems. ICT is too complex and subjective. It's so subjective that five traders will draw five completely different kill zones and auto blocks on the same chart. It's like having a recipe that says add some flour without telling you how much. There's an obsession with manipulation, assuming every move is a trap. This often pushes traders into counter-trend setups that fail. Imagine going through life thinking everyone is trying to trick you. That's exhausting and often wrong. Markets move for logical reasons. Most of the time, most ICT setups are untested historically with no statistical edge. The restrictive kill zones limit opportunities, and there is a psychological burden of trying to think like institutions without having the institutional tools. FDM's solution, we simplify trading into clear objective levels that any trader can identify consistently. We understand that the markets move based on real supply and demand, not constant manipulation. And we use time as a guide, not a restriction. Smart money concepts and its problems. SMC. SMC sounds impressive, but liquidity and mitigation zones fail more often than they work. They are frequently violated. SMC is over-theorized with more theory than execution. Students spend months learning the theory but struggle to make consistent profits. It's like learning to be a chef by studying molecular gastronomy. Before you can even cook an egg properly, it's confusing for beginners with too many overlapping concepts that cause burnout. Now, FDM solution, we strip away the jargon and focus on what actually works. That is pure price action at meaningful levels during optimal times. We use only what works. Those are four things: levels, structure, and time cutting out the fluff. Indicator-based system problems. Indicators are like trying to drive by looking in your rearview mirror. They show lagging signals that appear after moves have already happened. Indicators-based systems and their problems. Indicators are like trying to drive by looking in your rearview mirror. They show lagging signals that appear after moves have already happened. They clutter the charts from too many indicators, block price action clarity. Over-optimization means curve-fitted systems fail in live markets. But what is FDM's solution? Pure price action with no lagging tools. We read the market directly, not through the distorted lens of indicators. Now, VSA, volume spread analysis, problems in Forex. Problem in Forex, the volume is decentralized and inaccurate, making it unreliable. Reading bars becomes more art than science, making it overly interpretive. It takes years to fail the system, creating a long learning curve. FDM support is our solution. We remove the guesswork and avoid unreliable volume, focusing purely on price. Then real trade theory and their problems. There are too many interpretations. 5 traders draw 5 different waveforms. It's slow to react because patterns only become clear after moves are complete. It's weak in sideways market and struggles in consolidation phases. FDM solution works in all conditions, trends, ranges, and consolidations alike. And that's harmonic patterns and their problems. Harmonic patterns are overfitted and too rigid because markets don't follow perfect ratios. They offer race setups where you wait weeks for a setup that might fail. They are ignored by professionals and rarely used in real institutional trading. And our solution, the solution of FDM, we provide real and actionable setups daily, supply and demand zone, and their problems. These zones are often too vague or wide, leading to oversized stop losses. There is no anti-logic. Zones show where, but not when or how. Now, FDM defines precise levels plus structure at time for confident entries. Fundamental news-based trading problems. Market reactions are unpredictable. Bullish news can cause sell-offs. There's high risk for small accounts because news spikes cause slippage and lead to stop loss hits. Now, our solution is we avoid dangerous news periods and use time filters to manage risk. Poor price action and its problem. There's no framework, no clear anti-rules or risk model. It's difficult to teach or repeat because it relies on gut feeling. And our solution, we provide clear structure, journaling, and dimensional logic for repeatable success.